Welcome to Behind the Ticker. I'm Brad Roth, Chief Investment Officer of Thor Financial Technologies and Portfolio Manager of THLV, the Thor Low Volatility ETF. Behind the Ticker uncovers the inner workings of the ETF industry. We will interview portfolio managers and ETF service providers to dive deep into their work lives and their businesses. We will learn the inner workings of their strategies and what drives them as they continue to grow their company. Many of these individuals are entrepreneurs and will have unique and compelling insights to share as much goes on behind the ticker. Please note, nothing in this show is investment advice, and it is meant solely for educational and entertainment purposes only. Welcome to Behind the Ticker. Patricia Lizarraga, CEO of Hypatia Capital, is our guest today. She's also the portfolio manager for WCEO, the only ETF out there that invests solely in women-led companies. We talk about how she decided to start the business, the extra alpha that women can generate, and why she's investing in those companies, and also the great work that she's doing on empowering women to get them to invest and plan early. I think you're really going to enjoy this conversation with Patricia. Patricia, good morning. Welcome to Behind the Ticker. Thanks for joining me.
Thanks for having me, Brad. I'm excited to be here.
Yeah, I'm really excited to have this conversation. I think you have a really cool product in WCEO, and I want to learn about all the things behind it and how you got there. So I think, why don't we start there? Why don't you tell me, Patricia, about your background and how you got to where you are today?
Sure. So my background actually is in investment banking and private equity. I started my career at DLJ, and therefore, as an M&A banker, all of my clients were primarily CEOs and CFOs. And by definition, they were primarily men. And once in a while, I would have a woman client, and I would be extremely impressed both by her results and by her business acumen in general, and kept on thinking, wow, I would like to have more female clients. So I went out and started my own firm. But I also thought they were top performers among my clients. So that idea over time turned into, how do I measure that female performance and how do I isolate it and invest in it? And that's what ultimately led to the WCEO ETF.
That's great. So when you're not working at Hypatia Capital and you're not out selling and distributing WCEO, what do you like to do for fun? What does your weekends look like? What does life outside of the office look like for you?
Sure. So I would say I have two main hobbies, and they're polar opposites. I love sailboat racing. So,
oh, wow.
So I usually during the summer spend some time on Sonars in Oyster Bay at Swanica, and I love that. And then on my less competitive side, I love botanical illustration. So I take a lot of classes at the New York Botanical Garden online. That allows me to do that from anywhere in the world. I've taken also online botanical classes from Edinburgh. So those two things and my family keep me pretty busy.
That's such a cool hobby. I tried sailboating once. I was on vacation. They gave us a little dinghy sailboat, and it took me, 45 minutes to roll the thing over. So yes. That is such a neat hobby.
Well, the great thing about the keel boats is they can't roll over. I started in a dinghy too, and it was a very wet day. And then somehow I found a place that taught J24s. So I tried again in a small keel boat, and tell me how it goes.
Well, that's fun. That would make for fun summers, and that's really, really neat. So I'm glad you shared that. So what made you launch Hypatia Capital? Is it strictly to launch the ETF? Do you guys do other things?
So again, we started 15 years ago, and we really started as an advisory shop and building our network of senior women executives in order to service them from a more advisory investment banking perspective. And that grew into a very large network, and we would hold events about private equity, about M&A, but then we started looking at all asset classes. So it was an evolution into, how do we make investing in women in leadership a mass product? right? Because by definition, alternatives are a product that is appropriate for people who are, accredited investors and up. But we really think that investing in women in leadership is something that is appropriate for all individuals who believe in equality.
Yeah, and that's great. And so, what does Hypatia mean? It's got to have a secondary meaning.
Sure. So when I was researching a name for our firm, I researched first woman mathematician and first woman astronomer. And the name that comes up is Hypatia. She's the first published female mathematician known. And about 5th century AD, she was one of the last of the Neoplatonists in Alexandria, which at that time now is Egypt. Then it was Greece.
Yeah, that's cool. That's fun. It's always, I love talking to entrepreneurs and how they come up with, the names and how they came up with, their branding and everything. So that's very cool. I'm glad you share that. So let's dive into a little bit about WCEO, the ETF. So tell me about the strategy. How's it work? What's it investing in, the index, all the things?
Absolutely. So Hypatia's investment thesis is that women CEOs will outperform, right? So first, what does WCEO do? WCEO invests in all American public companies that have a female CEO, small to mega cap. Okay, why do we invest in those companies that have women CEOs? Because our investment thesis is that women CEOs outperform. And the question is, why do they outperform? And our investment thesis.
Well, that was my next question.
Yeah, it's because it's harder for women to get to the CEO role. So the ones that do make it, by definition, are extraordinary in that CEO cohort, right? They have a harder time getting there, so they have to jump through extra hoops or do something that makes them extraordinary. So the question is, okay, if you believe that women outperform and you're going to invest in women CEOs, how do you isolate that female factor? And that's where the construction. Go ahead.
So when you screen and source these opportunities and find these companies, how are you weighting the index? Are you market weighting it? Are you equal weighting all of these companies? How is the index constructed?
Sure, that's a great question. And what we did is we tried to isolate the female factor. So we thought, what are two factors that we think are making the selection or the weighting process not be about women? And there's two primary ones. It's both size and industry. So we have companies that range from $200 billion plus market cap to right around 500 million. And so unless we equally weight them, that would be more about size, as some other large ETFs would be rather about size than about the actual female factor. So we thought equal weighting would eliminate that factor. And the second factor that we think is important is the industry factor, right? Because there are many more women in consumer discretionary than there are in energy. So because because we are equally weighted, we correlate most closely to a small cap stock index. So the WCEO ETF is supposed to fit in that small cap allocation. So we took our benchmark, which is the FT Wilshire Small Cap Index, because we correlate to small cap index, and we matched their industry weightings. And therefore, when we did the so for example, if the FT Wilshire Small Cap Index has 6% in energy, our fund will also have 6% in energy. But we don't have 6% female CEOs in the energy sector, so we have to overweight them. So we made it industry neutral vis-a-vis its benchmark, and that gives us our weightings.
So how often are you running a new screen, and how often are you rebalancing the index?
Sure. So we're permanently looking at what's going on in our portfolio, because we have the discretion to veer from. We're not benchmarked to the WCEO index. The WCEO index is calculated after the ETF decides what it's doing, right? So because of that, we're constantly monitoring what's going on, but we rebalance it every month. So every month anytime a company no longer has a female CEO, or on the reverse, if a company appoints a female CEO, we will buy or sell that stock that same month and then reweight the index accordingly. It's very active.
So over time, yeah. So over time, are you finding you're adding more names to the portfolio because more females are taking on leadership roles? Is that something that you're seeing in your data and your index?
So in our ETF, the ETF itself only has 3 months. So I think that we can't say there's a specific trend, but in the index, which obviously is different than the ETF, we have seen an increase of women CEOs over the 5 years that we have created the data for. It's slow but steady progress.
That's great.
We're going in the right direction. We would like it to go faster in the right direction, but it is going in the right direction.
Yeah, your index just ends up being the S&P 500 in 20 years. That would be great, right?
Yep. Or half of it.
So
half of it.
So yeah, half of it. So what, before we kind of move in a different direction, and you touched on this briefly, but what do you think personally drives that female alpha factor, right? Like what is it that women are better at than men that are allowing them to drive alpha in these companies?
Sure. So we believe what's driving women's performance is how difficult it is to get there, right? We have 124 companies in our portfolio in all 11 GICS and sub-GICS, of which there are many more.
Yep.
Some of these are big companies. Some of these are small companies. Some of these are in industries like consumer products. We have 2 defense stocks, right? We own both General Dynamics and Northrop Grumman. We own Occidental Oil. And so the competencies that one would expect in one industry might be quite different than what the competencies one might expect in a different industry. We have quite a bit of biotech in our fund as well. So we think it was really hard to say, looking at all 124 of these individuals, to ascribe one leadership trait or one personality trait, because it really is dependent on the company. And the only thing that we find in common is that they're female, and that creates outperformance. So again, we ask ourselves why, and our conclusion is that it's the difficulty in overcoming the obstacles. Therefore, logically, there has to be a better performer to be able to overcome those obstacles. Think of it as like hurdle jumpers.
Yep.
Right?
It makes a lot of sense.
You're going to get the better athletes.
Yeah, no, and even in the short duration the ETF has been out, I've noticed the outperformance, and so I think what you're doing is wonderful, and I agree with you. There have been hurdles in place, and in order to get there, they have to be exceptional performers, and so I look forward to continue to track it and track the performance over time. So let's pivot just a little bit. I want to talk about kind of how long it took you to get this product to market, kind of start to finish. What did that look like from, the ideation of the idea to, having that first trade take place? And so tell me about that timeline a little bit.
Sure. So if we take the timeline all the way back to the founding of Hypatia Capital, when I started realizing, wow, I want more female clients, and they're so good at what they do, and they're the top performers of my clients. We can go back 15 years, but I think it was 7 or 8 years ago, I saw a clip of it was a head of a marketing of a company called Quantopian. And Quantopian was a trading algorithm company where traders could set up their own algorithm and prove that their investment thesis performed. And the head of marketing, actually, she tried doing it with women CEOs. And so, our methodology today may be a little bit different, but that was like this planted the seed. Well, what if I could turn this into a real product? And that must have been 7 or 8 years ago. And then we have thought of other products we wanted to do. And also we're a small independent firm. So it's really the idea, trying to figure out the product, also going through the different partnership possibilities, right? So this WCEO ETF, I believe, has the most amazing service providers, right? We are on the Ultimus platform. We use Vidant as a sub-advisory. Wilshire is our calculation agent. Brown Brothers Harriman is our custodian. If you look at our service providers, they are all, Blankrum is a trust legal counsel. We have top of the line service providers. And so trying out different partnerships also took some time, right? Really figuring out what's the best way for us to partner to put together this product where we can concentrate on our investment thesis and on building that out. So that took quite a while. And then the database just didn't exist. So we tried to buy it. We went to different data providers to just try to get the historical list of dates when women were CEOs and when they left, and we had to recreate it from scratch. So that also took some time because we had to try out different service providers, and ultimately we ended up doing it ourselves.
So we also do a lot of it ourselves. We have a lot of the same service providers. You had mentioned Ultimus, and they do a great job for us. So it sounds like you had launched your own trust. You're not on a white label platform.
We are on a shared trust on Two Roads.
Oh, okay. Are you on Ultimus's trust, or?
Yes.
So what drove that decision from either creating your own trust, because you had mentioned, you have some other products in mind, to kind of white labeling? I know that this is a major decision for a new issuer or for even an existing issuer if they want to make a change. So what drove that decision for you to, kind of get on an already pre-established trust to, or starting your own? Kind of what drove that?
So what drove it is we want to focus on the creation of opportunities for investors to invest in women in leadership. And that's what we've been studying for 15 years. And that's where we have so many contacts, so many data points that we want to focus on that. And what we didn't want to focus in is understanding and having to having to become experts at the creation of an ETF, at the creation of indices. We wanted to focus on what we know, which is isolating the female factor, and second of all, getting the world to understand what the female factor is and why it outperforms. Because today, the only place where you have more money right now going into early stage female focused funds than you have money going into gender lens products. And that is upside down, right? Because in your portfolio allocation, your public investments should be a much larger piece of your portfolio than your alternatives. So when we looked at that, we said, wait a second, that doesn't make sense. The public side should be much larger. And that's also a part of your portfolio where you can where it's appropriate for everybody, right? So the WCEO ETF is appropriate for somebody who has a $1,000 investment portfolio, and it's appropriate for somebody who has a multi-billion-dollar investment portfolio. And we believe that we want to talk to everybody. And as the ETF becomes, as it grows and as it has more assets under management, one of the things we want to do is have an educational component where we go out to the universities and engage more women in the financial services industry, because we all know it's been documented. I mean, I'm sure you've seen Julia Burstein's book, How Women Lead, or Ruth Shaver's book, and Patience's book, the Double X Factor. And these books really document the lack of women in the entry points in the financial services system. So we're trying to be part of the solution. How do we get more young women to be interested in finance to have more financial literacy and to be more confident investors. So that's our medium-term plan.
Wow. You've got a lot going on outside of just being an investment manager, portfolio manager. It really sounds like you're taking a lot of time to get involved and kind of push a movement and an idea. And, kudos to you. That's a lot of hard work. And so, just stemming off of that, in terms of educational series, are you currently working on that, or is that something
Yes.
that you're going to be doing in the future?
So we're currently in conversations with a association that really brings together a lot of young women, and they are asking us to figure out what the right educational platform to get those young women financial literacy education, so that they can at a young age start investing. I mean, listen to what Sally Krawcheck says, who really says it so well. And I urge everybody to really consider her platform, because it's very specialized in this way. But she says, invest early. The earlier you get started, the more likely you are to have that nest egg that everybody wants at retirement. So our thoughts in listening to what Sally's saying is, how do we be accretive to that? And our answer is, let's give young women something that they think it's interesting to invest in, right? So as a young woman, if you're the media is bombarding you with the lack of women in leadership, and we say, but hey, you can put your first $1,000 to investing in all women CEOs. We're hoping that will be something that will engage them.
Yeah,
and it'll be
that's
exciting
wonderful
to get to know their portfolio.
Yeah, and I've been following Sally for a very long time. I've not had the opportunity to meet her, and I watched her. I believe was she at Merrill,
Yes,
and then she launched her own firm. Yeah, and she does a great job marketing, and I've been following her for a while. So the two of you together should be able to do some damage out there in terms of helping this movement. But
an amazing job.
So let's go back to product creation. I have a couple more questions there. You launched on the New York Stock Exchange. So what drove that decision? There's other options out there. So what drove that decision to kind of launch on the NYSE?
So, we were torn. We think NASDAQ is a great option and has a female CEO, but guess what? So does the New York Stock Exchange. So we thought that was really interesting. So they were our two finalists. And ultimately, the New York Stock Exchange, I think 2/3 of our portfolio companies are New York Stock Exchange listed. And therefore, we thought that there was probably more synergies from that point of view, and that ultimately we could potentially create more content, more events as we got to know our portfolio better, because there were, the ratio of our actual of our actual companies in our portfolio was much larger.
No, that's interesting. So going back to kind of distribution, you mentioned that. So how are you approaching at this point distribution and getting WCEO out there?
Yeah, distribution is the hardest part, right? How do you get people to know about your product? How do you get them to trust your product? And how do you get them to pull the trigger? And so the good news is that I would say that the financial press has taken a liking to the ETF, because they love the fact that it's a pure play, and that we are about investing in women, and that's all we're saying. And so and if you say, what does a WCO do? And you look at the pictures, we are, as far as I know, the only ETF that has the pictures of their CEOs and their top holdings. And there's a reason for that, right? Because if you see the picture, it's WCO, and then you see 10 women's pictures, it makes the point. This is what we're doing. And it's different than perhaps anything else that we've seen out there in the market. So we have that, and it's also available to all individuals, because it's an ETF. So we are definitely trying to work the social media environment, and we do a lot on different platforms. We're getting better. We knew certain platforms better than others, and we're getting more experience on the different platforms. And we're also, continuing to talk to the media. I think that is a really important part of distribution. So far, it's been primarily financial media, but we're also, part of our plan is to go to mainstream media. Some of the shows, most of the morning shows have at least one female anchor, and so I think that might be of interest to them. And so that's really how we're getting started. We also have a partner that we've hired to do our wholesale to independent registered investment advisors. As you know, you have to get to a certain size before you can be on the major distribution platforms like Morgan Stanley, Merrill Lynch.
Yeah, it's definitely a challenge, especially for firms like yours and mine that are kind of smaller and new and boutique-y.
Yeah, if you look at the list of top women wealth managers, best in state, whichever of those lists you look at, the vast majority of the best advisors are Morgan Stanley and Merrill Lynch. But Merrill Lynch and Morgan Stanley won't put this on their platform until we're at a certain size. So that's a real challenge for us, because those are by definition people who would be interested in hearing what we have to say, and I think likely to give it some consideration.
Yeah, I agree. And it definitely makes things a little bit more difficult. And I wish it was different. I wish everybody got a crack as soon as we were listed to be able to be in these platforms. It definitely makes it a challenge for us who were starting really from scratch. And so I look forward to the day where you reach those hurdles, because I think you're going to have tremendous success in that distribution channel. And so again, I hope you one day get there and seize that opportunity. But I think the other thing I wanted to say is I think you're doing a wonderful job on LinkedIn. I see you almost every time I log in. So what do you think is working on that channel? What do you think you need to do more of? What's not working in terms of overall distribution? Kind of what's working, what's not?
So I think on LinkedIn, the people that are in your network, if you post regularly, and if we have 124 stocks. And probably what you see, one of the things we love to do is every time one of our company posts, say how proud we are to be shareholders, and put that in there, and put in how great the CEO is. And so I think that's broadening our network quite a bit, because we're reaching out to people that, I don't know that I had crossover with the leadership team of ADP. I don't know that I'd cross over with the leadership of General Dynamics. And so by really promoting and highlighting who's in our in our fund, who our holdings are, I think that's really working and amplifying our voice. Because we're not just talking about us and what our thesis is. We're saying, and look, this is who's in our portfolio, and proud of that. So that's what I think gives us a lot of opportunity to post in LinkedIn. And if you look at Twitter is a little bit different, because you're engaging with people, not really with companies. So in Twitter, I think our strategy, which I don't know if these strategies use, as you don't know who's invested in your ETF. So you don't know exactly what's working.
Yeah, I find that to be, I shouldn't use the word frustration, but it's until you get to 13F time, if somebody's a larger advisor, you can see who's in there. It would be nice to know, because in any other industry, right, if I sell you a product, I know that I can continue to build a relationship with you. I can try to increase my retention. But in this industry, a lot of the vast majority of holders of even our product, I have no idea who they are.
Exactly. So on Twitter, where there's so many celebrities and so many high visibility individuals, that they love to tweet and they love to talk, and they're talking to their followers, but there's not a lot of response. So actually, if you go in and look at maybe not Kim Kardashian, but a different kind of a different social media engager, the person probably only, 20 people may have seen their tweet, but only 2 comment on it. So you're really commenting to that person in particular. And so we believe that many of those people would love to know about the WCO, but there's no way to reach them other than by answering their Twitter. So I don't know. Honestly, I'm just giving you what we're trying. This is our first 40 Act product. This is our first ETF. So we have never been in the business of marketing to consumers and not knowing if they're actually heeding our call or not. So we're trying a lot of different things, but it's fun.
Yeah, that's what I was just going to say. That's the best part, I think, about being an entrepreneur is that you try things and sometimes they work, sometimes they don't. It's this large puzzle that we're constantly trying to solve. And again, I think you're doing a great job of getting the word out there and highlighting what you're doing. So, are you focusing primarily when you're out there selling this ETF, the target market being women and being women financial advisors? Is that really the primary sales target for you for this ETF?
So we think there's definitely a natural affinity of women wanting to understand what we're saying, right? And we think in the financial services sector, the men are also very interested in what we're saying because men advisors have female clients. And they want to know, is this something that perhaps would be of interest to my female client? Another part of our client base that is not women are girl dads.
I'm one of them.
Right. Quite a few men say, my daughter thinks this is amazing. And so, is that an appropriate gift to your young daughter? Is that inspiring her? Because girl dads want their daughters to grow up and be CEOs. And we think that's a real thing.
Absolutely. I just convinced my 6-year-old daughter to take the money out of her piggy bank and put it in the bank. So now I'll have to go home and convince her to buy WCEO with a little bit of birthday and Christmas money she has.
Exactly. And even if she has $25, she could do it.
Yep.
And so we think that there is, the WCO is for anybody that believes in equality because you can actually balance your portfolio from a CO perspective 50-50 fairly easily, right? And have it be appropriate. You could have half of it in a large cap stock allocation and half of it in small cap. We track to the small cap, but we actually have large, medium, and small in almost equal proportions. But because it's equal weighted, it's why it's a small cap allocation stock. So we think this should be interested to everybody who believes in equality, but we think that it might grab the attention of women first because there are a lot of women who are more interested in gender equality and very curious about it. But we certainly don't exclude the men and certainly not the dads.
Well, that's great. I was trying to do some research, and do you have any competitors? Are there any competitors to the WCO, or are you the pioneer here?
As far as we know, we are the first strategy that invests in women CEOs in the public markets. There are strategies in the private markets, early stage. There are early stage investors that are focused on investing in women founders. And there's a number of firms that do that. And I love each and every one of them. And I try to invest in as many of them as I can. But again, those are only appropriate for wealthy women. What about the person who has $20,000 in their IRA right now? Shouldn't they be able to invest in women as well?
Absolutely. I couldn't agree more. And good for you being, first. There's always that push for being first in a space. So I think you're going to have a lot of success. And where do you think, we talked about this a little bit, but when you're sitting down with advisors and you're talking to them, where are you kind of advising that they put this in their overall allocation in terms of model portfolio construction?
This fits in the small cap allocation. That is our benchmark. Our benchmark is the FT Wilshire Small Cap Index. And again, it's a small cap allocation because it's equally weighted and has a lot, has more small cap, has medium and large cap, but because it's equally weighted, it's going to correlate most closely in that small cap. However, one could say, I want more than just a small cap allocation in this because I want more gender balance. And also, we have the portfolio has 124 names, and it's fairly well balanced between small, medium, and large. What it's not going to do is replace your S&P 500 because it does not have any mega cap in it. Well, it has two that are borderline mega, right? And the mega cap, as we know, is what drives the S&P.
I want to take the time to thank you for being here. And I really learned a lot. And I think people are going to learn a lot about this from you. And I just want to say thank you for taking some time out of the day. So how can people learn more about your product, and where should they go to, figure out if this is something that they want to implement in their portfolio?
Sure. So on our website, www.WCEOETF.com is the first place to start. And there's some basic information, but it's in video and in written format, and the pictures of our top 10 holdings. Our fact sheet is downloadable straight from there. And there's even a link to send to your advisor. And we're happy to get on the phone with any advisor who wants to understand a little bit more of the mechanics. And the fact, the biggest, I don't know if you're getting this, but the biggest pushback we get from advisors is that we have so few AUM that they think there might be a liquidity risk. But so what advisors need to understand is the ETF is as liquid as its smallest stock. So we are no less risky than a $500 million market cap company. And for the kind of trades that are happening on your stock, it's an irrelevant point.
We ran into that issue as well, and it's just really an educational thing that size is not indicative of liquidity, and so that just really comes down to an education point. So, Patricia, again, thank you so much for doing this. I learned a lot, and I think what you're doing is wonderful. I'm going to peel $25 out of my daughter's account and buy WCEO, and I got to open up her little brokerage account. But again, thank you for being here, and I appreciate your time.
And thank you for the opportunity. And I love this new initiative by New York Stock Exchange. So congratulations.